In this video, we'll take a closer look at the new high-yield platform offering investments in secured loans with a 14% interest rate. We'll talk about the business model, the key features, the pros and cons of investing, and some risks you should consider. Triple Dragon Funding is a newly launched platform offering investments in loans to game development studios, mainly in the UK, Canada, and the United States. The platform is legally based in Luxembourg and offers a 14% interest rate with a minimum investment amount of €1,000. All loans are backed by a 90-day buyback obligation as well as collateral in the form of receivables or tax credits. The currently listed loans come with a 2-year term and an option to exit after 6 months. We have been researching Triple Dragon for the past month and gained access to internal documents that are not disclosed publicly, allowing us to better evaluate the risk of this business model, which you can also hear about directly from the founder.
I'm Peter, I'm the CEO and one of the co-founders of Triple Dragon. We've established Triple Dragon at the end of 2016. Together with my two co-founders, we saw a huge opportunity in providing finance to the video games industry because we felt it was a market that was not understood by banks, and that created a big opportunity for us to step in. So that's what we've did, and since the end of 2016 we've been providing loans to video game developers, publishers, advertising networks, pretty much everything in the video games industry, and we have been doing that on a senior secured basis because there's usually lots of security that you can kind of collateralize your loans with, so tax credits, app store receivables, publisher receivables. So we found a very good way to kind of finance on a secured basis and mitigate risk. And we've been doing that successfully since year one. We've been profitable since year one and growing very rapidly. And that's also why we're now kind of launching our own platform.
So what you are funding are specific loans from that Triple Dragon lender, which lends against collateral. All loans must be secured by at least 120% of the loan amount. The company has been operating since 2016 and at the time of recording has a loan book of €24 million. Around 70% of borrowers are repeat customers and the historical default rate is below 1%. As already mentioned, the lender has been profitable since inception, and you can review the financial statements in our statistics section within our Triple Dragon review on P2P Empire. To date, Triple Dragon has funded parts of its portfolio via Debitum. The lender also has access to funding through a regulated institutional fund in Luxembourg, as well as a non-bank lender in the UK. So far, no investor has lost capital when investing in Triple Dragon loans. That's a pretty impressive performance, especially considering that many new platforms launch as black boxes with limited to no transparency. Triple Dragon Funding is run by CEO Vitaly Zelovs, whom many of you may know from his previous role at Esketit. As of today, Triple Dragon Funding is not regulated and operates under an exemption, which we explain in more detail in our review. The platform plans to apply for a crowdfunding license in the second quarter of 2026. This application process is expected to take 6 to 12 months, as it would become the first regulated crowdfunding service provider in Luxembourg. Management chose Luxembourg because they already operate a credit fund there and are familiar with the legal framework. The platform does not withhold any taxes and offers investment accounts for both retail investors and legal entities. If you have a European bank account, signing up and investing is pretty straightforward. Just use the button on P2P Empire, navigate to Triple Dragon Funding and click on Sign Up. You will be asked to register with your email address and enter a few basic personal details. For me, the entire registration and verification process took less than 5 minutes. Once you receive the confirmation email, you will get access to the banking information. Make sure to include the correct user ID as your transaction reference when sending money to Triple Dragon Funding. Topping up your account usually does not take more than a few hours. In my case, I verified my account, topped it up and invested in available loans all on the same day. The investment dashboard is very simple. After logging in, you can see your account balance, profits and available loans. You can select a loan, review the terms and click on Request Investment Offer. Then you acknowledge the terms and continue. On the next screen, you enter the investment amount, at least €1,000 per loan, and click Invest Now. This works only if you have sufficient available funds. By default, the compound interest feature is enabled, meaning your accrued interest is automatically reinvested into the same loan. This ensures that your funds are always working and not just sitting idle in your account. If you don't want to reinvest your interest, you can disable this feature by navigating to the specific loan under the My Portfolio tab and switching off compound interest. The interest will then be available for withdrawal. At the moment, there is no secondary market. However, the platform plans to allow early access after 6 months by selling investments to other investors. Liquidity, therefore, cannot be properly evaluated yet. So that's a quick walkthrough of the platform. As you can see, it's not rocket science. Now let's talk about some of the risks you need to consider. One obvious risk is that the borrower may not repay a loan on time and that income from receivables or tax credits is delayed. In that case, Triple Dragon initiates recovery procedures, which are explained in detail in our review. Investors are covered by a 90-day buyback obligation, meaning principal or interest should not be delayed by more than 3 months. Another more platform-specific risk is the infrastructure risk. The platform runs on a third-party software provided by White Label Solutions, which is also used by companies such as Ventus Energy, Devon, and Astera Estate. While these companies are not connected, the failure of one could potentially create reputational issues for others. According to Triple Dragon, there is no overlap in ownership or conflict of interest between the software provider and the lender's core business. The platform also owns all its data, which is stored in the cloud together with a copy of the platform source code. Beyond these factors, investors are also exposed to broader market risks related to the stakeholders such as app stores or game publishers. One thing that I was particularly curious about was whether Triple Dragon relies on new funding to refinance old obligations, something I suspect is happening across many platforms, often creating hidden risks for investors.
Do investors face certain refinancing risks that are related to your business model? I know some platforms, they rely on refinance, like attracting new funds to refinance old loans. Is this a case for Triple Dragon as well, or no?
No, and this is also one of the reasons why we wanted to have our own platform, because we think it is important that we have kind of no mismatches between kind of asset and liability maturity dates. And if you use an external platform, you do not always have control kind of over the maturity dates. And having our own platform means that we can basically match the maturity dates of our assets with the maturity dates of our liabilities.
In our interview, we also discussed what would happen if the platform suddenly lost all of its funding sources. The founder explained that they would simply continue servicing existing loans. The main downside would be slower growth, not operational disruption. If you are a serious investor, I strongly recommend watching the full interview on P2P Empire. Before we wrap up, let's quickly look at the pros and cons. One unique and beneficial feature of Triple Dragon funding is that its funding sources are structured as ring-fenced SPVs. This means that collateral is clearly assigned to each funding source and no commingling of funds or securities is possible. Another advantage is the initially high interest rate combined with the compound interest feature and the current bonus of up to 3%. Returns are clearly above what most platforms offer today. The early exit option is nice, but the most critical factor is management's experience and the lender's track record. Most new platforms are fintech startups. That's not the case here. The main drawbacks are the lack of regulation at this stage and the reliance on third-party investment software. Additionally, the 1,000 minimum investment amount may deter some investors. After extensive research, which you can review yourself in our Triple Dragon review on P2P Empire, I believe the platform offers an attractive risk and return profile compared to many alternatives in the industry. High interest rates are often associated with questionable businesses, but that does not appear to be the case here. The elevated rates at launch are clearly a marketing strategy to attract investors. As the loan book grows, yields will likely decrease. At the moment, the lender charges borrowers around 24% on average, which makes a 14% investor return reasonable. As you can tell, this is not a long-term verdict, but rather a first impression. The pre-requirements for success are certainly here, but only time will tell how the platform performs in the long run. I'd already put some funds into Triple Dragon loans, so you will be able to monitor my monthly yields in our portfolio updates. As always, this is no investment advice. P2P lending is risky and you can lose your money, especially if you don't do your own research or follow platform's developments closely. That's it from me today. Thanks for watching and I'll catch you in the next one.